Hello everyone. Now we are on to the 11th lecture, question number 21. We have done lots and lot of practice by now. So I will not be explaining in very much detail, and in fact you all must be able to now try the examples on your own. So I sincerely advise you try the entire question on your own and then play the video and just verify whether you got it correct or not. At this stage, you must be in a position to solve the example on your own. Look at it. The following are liabilities and assets of ABC Limited as on 31st March 2019. Equity share capital of rupees 10 each, fully paid up 15 lakhs. So 15 lakhs divided by 10, 1 lakh 50,000 equity shares are there. This is the old face value. 12% preference share capital of rupees 10 each, fully paid up. So 5 lakhs divided by 10. 50,000 preference shares are there. 10 is the old face value. 14% debentures rupees 100 each, 5 lakhs. So 5 lakhs divided by 100. 5,000 debentures are there. 100 is the old face value. Outstanding interest and sundry creditors and goodwill, land and building, plant and machinery, furniture and fixtures, stock, debtors, cash and bank. And profit and loss on asset side means it is a loss balance. The following scheme of reconstruction has been duly sanctioned by all concerned. Now reconstruction word is given, but new company's name is not given, means it is a question on internal reconstruction. What is asked? You are required to draft necessary journal entries to give effect to the aforesaid scheme and also prepare not capital reserve, make it capital reduction account. So all of you pause the video and make 2 pages format of journal book and 8 to 10 lines format of capital reduction account. Pause the video and make the formats fast, everyone. I hope everyone is done with the formats. Now look at the first adjustment. Equity shares of rupees 10 each were reduced to the denomination means face value of rupees 5 each, fully paid up. So old face value is 10 and they are reduced to the denomination means new face value is 5. Face value is being changed. So what entry we will pass if face value is changed? All of you must be confident with that now. Equity share capital with old face value, that is rupees 10 account debit. Now old face value, so amount will be 1,50,000 shares are there. 1,50,000 into 10, that is 15 lakhs. To equity share capital with new face value, that is rupees 5 account. So amount will be 1,50,000 into 5, that is 7,50,000, and remaining 5 rupees which they decrease, okay, that will be transferred to capital reduction account. So to capital reduction account with remaining 5 rupees, that is 1,50,000 into 5, 7,50,000, being equity shares reduced from rupees 10 each to rupees 5 each. Now to capital reduction account, so in capital reduction we will write on credit side opposite account by equity share capital account with the amount of capital reduction, that is 7,50,000. Now, second adjustment. Wherever doubt, you can rewind and listen to it again. Now, a lot of practice is done, so doubt should not be there generally. And if still there is a doubt, I'm just a call away. You can ring me and ask the doubts and clarify it also, or you can even WhatsApp to me. 12% preference shares of rupees 10 each fully paid were reduced to 12% preference shares of 10 each 6 paid up. Now face value is remaining same. From 10 it is remaining 10 only, but paid up value from fully paid 10 rupees it is decreasing to partly paid 6 rupees. So here directly 4 rupees what they are sacrificing will be transferred to capital reduction. Face value is not changing, paid up value is changing. So old face value we don't have to credit, new face value, sorry, old face value we don't have to debit, new face value we don't have to credit. Only paid up value is changing, so directly 4 rupees we have to transfer to capital reduction. So second entry, 12% preference share capital account debit. Okay, no old face value because face value is not changed, to capital reduction account. Even rate of dividend is remaining same. So straight away we transfer the amount to capital reduction account. What amount? There are 50,000 preference shares and 4 rupees what they are sacrificing. From fully paid up 10 rupees they are becoming 6 paid up. 4 rupees what they are sacrificing will be transferred to capital reduction. So 50,000 into 4, 2 lakhs. Okay, 50,000 preference shares into 4 rupees what they are sacrificing will be transferred to capital reduction, being here paid up value. Here being paid up value reduced from rupees 10 each to rupees 6 each. Face value is not reduced, paid up value is reduced. To capital reduction, so capital reduction on credit side by 12% preference share capital account, by 12% preference share capital account, and amount will be 2 lakhs. Okay, by 12% preference share capital account, amount 2 lakhs. Now adjustment 3, the debenture holders agree to forego, means sacrifice, the interest outstanding on debentures. So entire amount of interest 70,000 will be transferred to capital reduction. No mention is there about debentures, only interest amount is mentioned. So outstanding interest on debentures account debit 70,000. Okay, outstanding interest on debentures account debit 70,000 to capital reduction account 70,000, to capital reduction account 70,000. Entire outstanding interest is directly transferred to capital reduction, being outstanding interest foregone by debenture holders. Okay, being outstanding interest foregone by debenture holders. Now, to capital reduction, so capital reduction account on credit side by opposite account outstanding interest on debentures account 70,000. Okay, by outstanding interest on debentures account 70,000. Next, adjustment number 4, land and building were revalued at 7,50,000. How much is land and building in the balance sheet? 6,50,000. So increase of 1 lakh will be transferred to capital reduction, whereas plant and machinery is to be written down to rupees 7,50,000. Plant and machinery is 8 lakhs. Written down to 7,50,000 means we will write off 50,000. So two separate entries will come. Land and buildings value is increasing. Plant and machinery's value is decreasing. Land and building is increasing, so that amount is a profit we will transfer to capital reduction, 1 lakh rupees. So for that, land and building account debit 1 lakh. Okay, land and building account debit 1 lakh to capital reduction account 1 lakh. Being increase in the value of land and building. Being increase in the value of land and building. Now, two capital reduction accounts. So, capital reduction account on credit side by land and building account 1 lakh. Okay, by land and building account 1 lakh. Next, plant and machinery, we have to write off 50,000. So for that, reverse entry will come. We have to utilize capital reduction account. Now to utilize capital reduction account, we will reverse and debit that. So capital reduction account debit 50,000 and we transfer it, we utilize it in writing of plant and machinery account. So to plant and machinery account 50,000 being plant and machinery written off. Okay, being plant and machinery written off. Now capital reduction account debit. So in capital reduction account we'll write on debit side to plant and machinery account 50,000. Okay, capital reduction account debit side to plant and machinery account 50,000. Next, a call of rupees 4 per preference share was made and this was duly paid by all preference shareholders. You can see we reduced the paid up value from 10 to 6. So that 4 rupees what they sacrificed we have again called from preference shareholder. We have done these entries also earlier. Two entries will come for that. First, preference share final call account debit. Okay, 4 rupees is called. So preference share final call account debit to 12% preference share capital account. Okay, to 12% preference share capital account. Now 50,000 preference shares into 4 rupees is called, that is 2 lakh rupees. Being final call money due. Okay, the narration will be being final call money due. Now for receiving that money, bank account debit, bank is the receiver, debit the receiver, bank account debit 2 lakhs and we will close preference share final call account. So we will credit to preference share final call account 2 lakhs. Being final call money received. Okay, being final call money received. Now, 6th and 7th will have no effect in capital reduction account. There is no capital reduction over here. Now, creditors are given option, 6th adjustment. Creditors are given option to either accept 50% of their claim in cash in full settlement, or to convert their claim to equity shares of rupees 5 each. Now, creditors of 1 lakh have opted for shares in satisfaction of their claims. What are creditors? 3,50,000. 1 lakh have accepted shares in satisfaction of their claims. How many shares? 1 lakh, 5 each. Because the face value has been already decreased from 10 to 5 rupees, new face value is 5. So 1 lakh divided by 5, 20,000 shares we would have given them. Okay. So 1 lakh rupees have taken equity shares. Now what are remaining? 2,50,000. Now nothing is mentioned, and creditors are given two options. Either they take 50% of their claim in cash in full settlement, or convert them into equity shares of 5 each. Now when they say creditors for 1 lakh have opted for shares in satisfaction of their claims, means it is quite obvious that remaining have taken cash. They are given two options. They have to select one of them. So if I say Mr. A and B have gone for a movie, Mr. A liked the movie, it's quite obvious that Mr. B did not like it. Okay. So when they say creditors are given two options, one to take cash in 50% in full settlement, or take equity shares. When they say 1 lakh have opted for equity shares, means remaining of 2,50,000 have gone in for cash payment. Now cash payment means 50% only we will pay in cash, that is 1,25,000, and remaining 50% they have to sacrifice. Okay, in full settlement it is given. In full settlement means remaining 50%, 1,25,000 they have to sacrifice, which will be transferred to capital reduction account. I repeat, this is not explicitly given in the question that 2,50,000 have gone in for cash payment, but it is quite obvious when they say creditors for 1 lakh have opted for shares, means remaining creditors of 2,50,000 have opted for the other option of cash payment. So this is implied in the question. Okay, it is not explicitly given but implied in the question. So what entry will you pass for this? Creditors account we will debit and close with full amount 3,50,000. Now out of that, 1 lakh have opted for shares. So to equity share capital account, 1 lakh. And how many shares we discussed? 20,000 shares, 5 rupees shares. So 20,000 shares into 5 rupees value, they have opted for equity shares. Remaining, they have opted for cash is understood. So remaining 2,50,000, 50%, 1,25,000 we pay them in cash. And remaining they sacrifice, which is transferred to capital reduction account, 1,25,000. Practice of equity shares and creditors and cash settlement is done 2-3 times in past questions also. So if there is any confusion, you can rewind the video and listen to it once again. Being creditors settled. Okay, being creditors settled. Now two capital deductions. So in capital deduction account, we'll write on credit side, opposite account by creditors account, 1,25,000. Next, reconstruction expenses amounted to 25,000. So for reconstruction expenses, we will utilize capital reduction account. Okay, capital reduction account debit to utilize it. And for paying it, cash goes out, credit what goes out to cash and bank account. Okay, for paying it to cash and bank account. And what is the amount? 25,000. Being reconstruction expenses paid, being reconstruction expenses paid. Now capital deduction account debit. So in capital deduction account we will write on debit side opposite account to cash and bank account 25,000. Next, last adjustment, goodwill and profit and loss account to be written off. How much is goodwill? 75,000. And how much is profit and loss account? 9,50,000. First, let us do the posting because remaining amount will transfer to capital reserve and then we'll pass a combined entry including the surplus transfer to capital reserve. So to goodwill account, what is the amount we will transfer to goodwill? Write off goodwill? Full amount 75,000 and 9,50,000 of P&L. So to goodwill account 75,000, to profit and loss account 9,50,000, and then whatever amount of surplus remains will be transferred to capital reserve. Let us do the credit side total first. 750, 950, 10, 20, 11, 20, 12, 20, 12,45,000 is the credit side total. All of you must be doing it in the calculator. Now from that you subtract debit amounts. So 950, 10, 10, 25, 11. So 1,45,000 will remain. Okay, 950, 10, 10, 11. So 1,45,000 we will transfer to capital reserve account in bracket balancing figure. Okay, surplus amount we have transferred to capital reserve. So combined entry now we can pass including the writing of capital reduction account debit. Okay, for writing of capital reduction account debit to goodwill account 75,000, to profit and loss account 9,50,000, and the surplus transfer to capital reserve. So to capital reserve account 1,45,000. Total 9, 10, 10, 70, 11, 20, 11, 60, 11,70,000. B, okay, 11,70,000. B, fictitious and intangible assets written off. Being fictitious and intangible assets written off. Now formality, total of journal is required. In calculators you all can do it 15, 17, 18, 20, 22, 25, 35, 36, 36, 70, 37, 20, 37, 70, 37, 90, 38, 65,000. Okay, just do it in calculator. I may be wrong, I've done it orally only. But if you do it in calculator and verify, you get 38,65,000 off. Okay. So this is how we have to do it. Luckily, in last 2-3 questions, balance sheet has not been asked. Otherwise, the question becomes too lengthy. And let us hope in exams also balance sheet is not asked. Only this much is asked for 15 marks. So that will be all in this lecture. Bye everyone. Take care. See you in the next lecture.